The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends? As we start the show off, we're up a couple points on the S&P cash. We're up, 28 points on the Dow, and on the NASDAQ, we're down 3. Crude oil's down 12 cents. Was kind of a very interesting day because I don't know how long it's been going on, but for a while, if you go back historically, when the markets are in sync, the S&P, if it's up 1 point, the Dow will be up 10 points. The NASDAQ will be up 2.2 points. It's been a while, but we've had a very strange market for a while where none of those things were anywhere close. For many days. And I saw it and spotted it today, and I said, you know what? We were at one time kind of close. They were all lined up finally. The market was back in harmony. And of course, it was like a plate dropped on a concrete floor. That shattered fairly quickly. We were up, 5-6 points on the S&P cash at the high. We're at 2536.88. Volume was fairly light earlier in the day, still not strong. For a Wednesday, we should be pushing about 2.2 billion shares. In October, we're at 1.76 billion shares. So still not getting any kind of real juice to the upside in volume and or in dollar volume either. We're seeing at least a little bit of thought that maybe throwing more money at the market right now may not be the best idea. We'll take a look at a few of those. And what else is happening? Well, we always come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And I generally have, when I started trading, it was not uncommon to see quotes really lag the market. And by lag, I mean sometimes 10 minutes. Even if you had a good internet connection, just didn't matter. They'd slow those computers down and you were trading on 10-minute behind information. And of course, that's in the early 2000s. But that kind of always led me, even if I wasn't paying attention to it, and sometimes even throwing a towel over the TV just so the ticker was down at the bottom, as a backdrop, so I knew that kind of at least I was in the same ballpark. The quotes I was getting were the same ones that they were putting out on CNBC or Bloomberg or whatever. And didn't really pay much attention. Actually didn't have the towel on the TV today. And I had to start laughing because there's not many times when it's fairly funny on CNBC or any of the infotainment financial channels. But I noticed something. And I thought, you know what? It's just me. And a couple minutes later, I noticed it again. And what is it? Well, they're having all these hearings on Capitol Hill. And they're barbecuing the CEOs and all that guy. But there's something in the background. What do you think that something was? It's something I remembered. It was iconic. Well, apparently a bunch of people have snuck into those hearings. And when they're on camera, put a little top hat on and a fake white mustache and look like Mr. Monopoly. And I had to watch it a couple of times, but there were at least a few people in there photobombing behind these CEOs as Mr. Monopoly when they'd come on. And I had to say, well, my hat's off to those folks that would spend all their time. They got nothing better to do, I guess, than go and play Mr. Monopoly behind the Senate panel or whatever it is, barbecuing. I didn't have the audio on, but I'm pretty good at spotting that stuff in the background, and I thought it was pretty hysterical. But you'll never know. Anyway, we're up 2 points. Not a lot of power. Kind of seeing these SMHs kind of whiff up here at these highs. They pushed it a couple of times. Is it going down? Maybe, maybe not. Is it going up? Certainly, I think you probably would have had a bigger push by now if it was. Do we come out of this with a draw? We could. So we'll keep an eye on that. Seeing some stocks that are not acting correctly according to the news, and we'll talk about that. See if there's anything else. There's a few more things. In the meantime, it's always good to start off with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 2011, Steve Jobs, the co-founder of Apple, revolutionized the computer, music, and mobile communications industry with such devices as the Macintosh, iPad, iPhone, iPod. Dies at 56 of complications from pancreatic cancer. And this is one of the sad days. Not only did somebody that really could move things and move his business, but avoidable. I've talked about this somewhat. Pancreatic cancer, 95% a death sentence in 6 months. One of the worst ones you can get. There are a handful of operable versions that you can totally recover from. But Steve Jobs hanging around a bunch of whack jobs out there in the San Francisco Bay. Didn't believe in surgery or medicine. Shakes their fist at big pharma. Guess what? He screwed around for the 6 months that he had the opportunity to fix it. Finally, when he went in, it had progressed exponentially, and there was no saving him at that time. You know, it's tough enough when you don't have the opportunity to save somebody. His doctor did make some comments at the time, and I don't understand why the hatred for vaccinations, why the hatred for medicine. I almost think that movie, The Gods Must Be Crazy, are people really just that fixed in weird thoughts? I know a lot of people think that Elvis is still alive in a checker in a Piggly Wiggly somewhere in Tennessee. A lot of people have other ideas. They don't hurt anybody by having them. But this is the one where you think, you got all the money in the world, got all the reasons to live in the world. You want to change the world. And what do? You start believing a lot of nitwits. You end up dying. That's probably the worst part of this whole thing, is when it's avoidable and people don't do what their doctors tell them. They believe all kinds of nitwitty ideas, and they pay the ultimate price. On this day in 2011, we'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to go right to John in Chicago. How you doing today, John?
Hey, David. How are you?
Fantastic.
Great. Thank you so much for taking my call. So, my question, can you hear me okay?
I can hear you perfectly.
Great. Okay, so the IWM, I'm looking at it. It looks like a real interesting level here today. Going back to the 26th of July, we had a little top, came down all the way down to $134.20, and then crept its way back up. Let's see, when was it? September 22nd. I was anticipating, along with a bunch of other people, that might be a double top. Went the wrong way on that, but now it's back up here. I'm not huge on Fibonacci numbers. I know Larry Pesavento is the master of this, but we're all the way back up. It looks to me like an exact 1.618 retracement from that previous high to that low to where we are as of yesterday. And then
I'm not following you. November 3rd of 2016, you had 113.93. You go up to December 9th of 2016, which is pretty much straight shot. You go sideways until pretty much August 18th, and then it came up. You had a big day and a breakout with volume on the 27th. But other than that, I just see from December 9th of 2016 all the way into really almost this breakout of the last 7 days was just a huge long consolidation with energy most of the time to the downside. So take me back. What are you thinking here?
I was looking a little more. I'm looking at your screen and my screen at the same time. Okay. I was just going back to this previous high, July 26th.
July 25th. Yeah.
Right.
Okay.
Then it came off of that down to 134. That was 22nd of August. 134
yeah.
20 cents.
Yep.
And then crept its way all the way back up to yesterday. And the number I was looking at, and I wanted to get your opinion on this because I'm kind of a newbie when it comes to Fibonacci numbers, but it looks to me from that previous high down to that low to yesterday, a perfect 1.618 retracement.
You got a fairly strong July 25th to August 18th and a fairly strong and consistent trend from August 18th up to this high today.
Right.
I don't know how you put together any more Fibonacci's out of that. You don't have a sea leg anywhere.
Right. I mean, I'm looking to get in on the short side here.
Okay. What I was going to say is I don't think you really have a lot in any kind of Fibonacci thing because basically everything got washed out over this long consolidation.
Yeah.
And you really don't have much in the way of the move higher. Let's take a little longer look.
Okay.
Now, if you want to take a look at the longer term ABC, you would start off with the February 11th, 2016 low at 91.40. Your June 8th high would be one Fibonacci number that you use, right?
Got it. I follow. Yeah, I'm watching your
screen. And then the next one would be the June 27th at 106.28. Now that sets up a 1-to-1 at 131.61. A 1 to 382 at 141.29, a 1 to 15 at 144.28, and a 1 to 1618 at 147.26.
Okay.
So that's the completion of all of those that are statistically derived out of the Fibonacci sequence. And so that's just your one ABC. So if you're watching on those, of course, you can always go back and pick it up later and look at them. But those are kind of the strongest Fibonacci levels out of this entire move. A lot of it was just noise and a little bit of a pullback. And the biggest thing is this huge move from basically December of 2016 all the way until this gap pretty much in mid-September. It was just a giant long sideways move. Now, the downside that I like or that I dislike about IWM moving significantly stronger than the rest of the market is that's generally a fairly good signal that that's the end of it because the small caps tend to, I thought we were just going to get a pullback, but a huge move in the IWM generally precedes a fairly large pullback in the market. You just don't have a big signal on the IWM yet that says that. So let's take a look at
for sure. I mean,
let's take a look at let's take a look at the risk reward when you set that up. There's not a bunch of confluence levels or anything else, but you do have some real congestion levels that will come in, and those are 133 to about 127. If this thing was going to fail, you'd probably look at somewhere in that area. It's also where this thing gapped up back in November 14th of 2016. There's a little gap there, actually a fairly decent sized gap on a lot of volume. So that's probably when this thing does decide to pull back in a bigger function, whether it starts today or in 2 months. This is probably the target, about 128 to 130. Is probably
I see that.
Where you're looking for the pullback. So you're at 150 something. Do you have any real signal out here? No. Did you get them in the .com bubble? No. Did you get them in the 87, 88 Black Friday? No. Everything just fell apart. So the problem is that IWMs at the end of huge bubbles, which I suspect that we're kind of in, mostly because of the enormous PEs going forward, which you'd have to go back to 1880 to find the market as expensive as it is today. So
I was just a young pup then.
Huh?
I was just a young pup then.
Okay. Anyway, yeah, as far as price earning multiples, this is one of the most expensive markets. The .com, we really don't, so many of the stocks never made a dime, so there was no PE. So kind of hard to gauge about against that one. But price earning multiples in the 2008 debacle and some of the other ones weren't anywhere close to where we're at now. So the question is, how bad can this get if everything turns to mud? And will it? I didn't think so. IWM running the way it does, though, does scare the bejesus, just because I've seen so many of these things be the end of more than just a pullback, but some significantly long highs. If you want to hang on through the break, you can. We'll talk some more. We'll be back in just a second.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So do we still have John on the line? Apparently not. Okay. Somebody thought that maybe he was talking about just the retrace of this last move up, or the move before that up, or something else, but I couldn't follow what everybody's saying. But if we're talking about just this last move higher from the August 18th low to the high today, your 382 would be 144, 142.36 for the 0.5, and 140.42 for the 682. Now that 682 takes you right down to that gap that I kind of talked about, or one of those gaps that I talked about around 139 to 140, which is kind of the first one out here. Does it look good? You had a strong breakout. You had a long consolidation. If we would have seen, I think, that kind of juice in the NASDAQ and in the NYSE, I would probably think a little less. The only thing you can't really say is when the small caps run, which is generally at the end of a big bull run, there's nothing that you can find. There's just not enough times that it did it that you can make a lot of case that it's over right now or over in 6 months or over in 6 minutes. You got a little bit of a pullback here today, which is the first you've gotten. And of course, when we look at the markets out here, we're up 2 points on the S&P cash. Volumes coming in at 1.87 billion shares. So a couple of days where the volume's been kind of quiet. You've kind of pushed higher. Everybody wants to be long, which is always scary. Shorts are in very small supply. So if you do turn down, you can have some wicked turns, mostly just because there aren't any shorts to really pick that up. Let's talk about some other ones that are kind of keys to what you want to look at for market reversals that don't have anything to do with traditional technical skills. And a lot of those are very highly shorted stocks. They tend to run much faster than others. And also kind of an interesting little pattern out here that I did want to bring up in Tesla. I had some people ask me why I went ahead and pulled the trigger for Tesla and covered the short. One, anytime that you're successful in shorting a stock that has fairly high short interest, you should count yourself lucky. What we did have off of the test of the high in Tesla, the June 23rd high with 13 million shares and 7 million shares, you can get these confluence levels, and these things tend to be fairly decent levels. If you don't have a lot of juice, they'll go ahead and bounce the first time. And I think that's what you got. 336.17, 333.23, 333.23. You got right into that on the down move and then went ahead and reversed. And of course, this makes me think of the old joke where, we can't get any of the cars produced, so we should buy this company. Well, what if they just burn down the entire factories? It would make it a lot simpler, wouldn't it? They don't have to sell anything. People just have to buy the stock, and it will go higher until it does not. But if you want to look at confluence levels, this is kind of good indication of why you can pull some of these things out, take your money quickly. I think this is eventually going back down unless they have some kind of miracle that I'm unaware of. They will continue to overpromise and underproduce as they have for all the years that they've been in business. But February 27th is the starting point, which is 242, right? If you basically put together the two Fibonacci movements up to the high on September 8th and use the second one from July 10th, you'll see that there's a very nice confluence level. This thing came right down into it, bounced right off of it. And of course, this is one of these stocks where you kind of have to take your money fairly quickly because everybody knows, just like many other stocks, everybody knew the dot-com stocks were a sham. I think Tesla, not a sham, but much more like iOmega. And that is, you've got cult members that have made a lot of money in this stock. They only believe that people are going to drive electric cars from Tesla. They don't believe any kind of real competition can ever come in. Tesla will rule the world. They'll sell all the cars there ever was. And guess what? They won't have to throw $30 billion to build factories. Well, reality in the world is that competition does come along, that you do have to spend money, and a lot of money, to build cars. And I don't see anything that says that they've got one particular ability to corner the market on lithium-ion batteries. If they had some kind of technology that was proprietary to them, I'd say, count me in, I'm ready to go. But they've shown none. They continue to be very much like Apple in a way. Apple has released a lot of dead products. We've seen, what have we seen? Oh, the battery packs. Everybody was going to buy those a year ago. Remember those? Didn't go anywhere. This last summer, everybody was going to start buying solar panels that look like shingles for a roof. They were 4 times more expensive than solar panels. And of course, solar panels are 4 times more than buying electricity from the electric company. So what do you do here? Well, they're selling the future, which I don't have any problem with, if you can grow into it. I had a conversation with somebody this morning, and there's a lot in Tesla that you can learn, but one of them is that they are pushing that chemistry moves at the same speed of electronics, i.e. Moore's law. Every year or two, everything doubles in speed and drops the half in price. Well, that doesn't hold and has never held true for chemistry. If someone can, you can call in and call me you can call in and tell me why I'm wrong in chemistry, but I have yet to find where chemistry ever got better than 2 or 3 or 4 or 5% better each year. It never got 100% or 200% better. And my thoughts are that these companies could be worth this if they could go all electronic, i.e., if someone could ever get a supercapacitor that could replace batteries. Of course, some people are thinking that they're going to use metal batteries. And of course, there's nothing like buying the most expensive metal to produce, like aluminum, and burn it so that you can drive your car down the highway. You know, if it was something that melted at a low temperature, maybe that'd be interesting. But aluminum kind of have to be one of the highest temperatures in the world. There's a lot of aluminum. I just don't understand the thought that we're going to use aluminum to power our cars. There's a thing called an aluminum battery, aluminum air battery, that can be used and does work. It's just, if you started using it, the price of aluminum would go up 10 times, and it wouldn't be, you just couldn't use it. Anyway, I'm going to talk just a little bit more about Tesla. Actually, what do we got? Yeah, we'll talk a little bit about Tesla more, but you can give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And had an email here, so we'll diverge from the Tesla talk for just a second. But the question is McEwen Mining and whether or not you've got some kind of lowdown here. One of the things I like to do is if you come down on huge volume, as you did in McEwen Mining, I like to see a stock consolidate for a while and go sideways. When this thing has come down on the energy that it has, you'll like to see it go sideways, and all the energy and all the fast money crowd and the people that have been long this thing think they're going to get their money back. You want to see these guys exit slowly and just lose all interest in it. And, you know, if this thing would have come down in light volume, I would have said go ahead and look at it. But for me, can it bounce back up to 230? Yeah. I'd be much more interested in this thing if it went sideways for a few weeks around this $2 level, like someone was buying this low. But I think you're going to need a little bit more time on this thing. I don't like to buy stocks that came down on heavy volume and then buy them for some kind of V bottom. I always think that you get more of a U bottom when you see that heavy energy to the downside. So could it be? Yeah. I just think needs a little bit more time. Now, Tesla, of course, rallied on the news that it couldn't produce its cars. And a big upgrade this morning by somebody telling everybody how not producing cars is a good thing. They didn't actually say that, but basically what they're saying is, you know what, this guy's told us what he's going to do. He's been wrong and late every single time, so you need to buy more of this stock. And that's the kind of cult behavior that you always want to look for and identify in a stock so you know what you're trading. But you know, this guy's got several other businesses. One, the most interesting to me is the SpaceX business, because I think he's already making money there. That'll probably become public next year. The problem is that he tends to overpromise and underdeliver. Said he was going to Mars in 2022. Now he says he's going to Mars in 2024. There's just one problem, and that is humans would last an average of about 272 days with decent amounts of protection from the solar winds and X-rays. Women would last about half that. So you'd about get there. And of course, the gravity's a little less. But of course, when you landed on them, if you lived long enough and made it there, you'd be so weak that you probably couldn't get out of your seat on Mars for maybe a week or so. So the first week would just be sitting around. Second week, maybe you get out and you can start doing stuff. All the surface of Mars is covered with a thing called perchlorate, which if it gets in your eyes or on your skin, just nasty. Might as well be spraying sulfuric acid around, maybe a light coating of sulfuric acid on everything. The dust, everything you bring in. And of course, if there's one solar flare during the whole thing, you die within a couple of weeks. So what we need to be able to do that they haven't been able to do yet is figure out how to build shelters and also come up with a way of shielding from those high intensity effects out there. And it's just like electric cars. It's going to come. It's going to happen. Normally, it takes a couple of years after they figured something out to get it in production. So if they don't have it out, if they're not looking at it now, you can talk that it's at least a couple of years down the road. Whether it's cars or space, once you come up with something that actually works, it still takes a while to produce it and make it and get it into production. So I'm kind of always worried that this guy continues to say all kinds of wild things. Not many people actually question him on it. And eventually, I think this is all going to burn down and everybody's going to go, why didn't anybody ask him why he said we were going to the Mars for 3 times, or that Tesla was building this giant lithium-ion battery factory and the costs were going to be half? Well, as soon as you say that, then, of course, Chile raises the price of the export of its lithium. It comes in short supply because everybody wants it. Prices go up. And guess what? Your prediction of everybody driving an electric car probably not panning out. The price of the batteries goes up. Well, it seemed like a great idea at the time. And unfortunately, the stock market is littered with people that believe in the blue sky. I shorted this one because it had the pattern that I've always looked for and consistently made money when I played it. That was that it came down on heavy energy from that June 23rd high down to the July 10th low. That was an 8.4 on my power law vector indicator, all the way up from July 10th low to this high where it double tapped the previous high on almost half the volume. It was just a 5.4. So the energy on the way down is just the opposite of what we were talking about MUX. It actually went up on light energy, tested on light energy, and it's fallen apart. Now, high shorted stocks tend to have pretty big reactions. And since most people haven't been in a real bear market in a while, they probably forgot just how wild these kind of swings can be when you come out of them. And you, especially when you just have a handful of stocks that are highly shorted like Tesla, you got to watch out. But it's not that I hate the cars. It's just that I've been promised all this stuff far too many times. And you don't have to be cynical, but you do have to be skeptical when, I guess the best way, forget who said it, but extraordinary claims need extraordinary proof. And when they're just pie in the sky, I'm saying we're going to Mars, we're going to build a battery plant, and it's going to crank out huge amounts of batteries. And, of course, lithium will remain at the exact same price that it does today, but we're going to turn out 10 billion lithium-ion cells. It would probably be true if you could get that mineral anywhere, but if 3/4 of it comes from one country, what is the country naturally going to do? They're going to raise the prices. Now, does this matter if you're trading it today or tomorrow? No. But I see a lot of people in these cult stocks like Apple, like Tesla, that you see and you wonder how these things, even Amazon at over 110 bucks in 2000 went back down to 10 bucks. You can find these things radically overpriced. Apple probably not as radically overpriced as Tesla. If you held Tesla today and they actually said what they were going to do, the company would be worth 350 bucks in about 12 years. So you're paying up for 12 years of growth today on the basis that they will just do what they said they did and nothing will ever go wrong. And almost always to a fault, like iOmega in the 90s, you find these things, the wheels just fall off. everybody goes broke, and everybody scratches their head and wonders why. I think there's a theme to these things. You can't put calipers on it exactly, but I don't dislike the company. I dislike the stock, and they're two different things. But both stocks, it's the same. The stock is the story. It is the company, and people can't separate them. So you always have to watch for these, but they're very enlightening. You can learn a lot from Amazon in 2000 or Tesla today in 2017.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
Well, we got a lot of response in the email during this for that. Sean says, well, if they die twice as quick as men, you just need to bring twice as many women. I don't think Sean's thought of the spirit of space travel with that one. Another one asking me why you just can't shield everybody. And there's a couple of reasons. One, after you start adding so much shielding, it really doesn't buy you anything more. A half a foot to a foot of shielding doesn't buy you half as much, or half again as much, maybe 1/10 as much. You want to use something that's very high in hydrogen. So plastics have been thought of. In fact, the capsule that they designed to go to the moon again has all the water stored right underneath the surface of the aluminum skin. And in high energy events, literally it can be worse that you're sitting behind the aluminum. It can cause, when you do get one of those high energy particles, it's actually like shrapnel coming off the inside of that aluminum from the spaceship. It doesn't make holes in it, but it does make high energy particles that can really hurt you. And that's why they put the water, it kind of freezes, but it's all the same thing. But again, once you get past about an inch and a half of some high in hydrogen-like water, it just doesn't do that much for you anymore. So we need to get a bulldozer to the moon. We need to bulldoze about 10 feet of earth all the way around and on top of some kind of structure so that we can sit inside of it and hide. We've sent about 45 or 50 different missions to Mars. We found out that there's going to be an average of going there and coming back about 4 different extinction events, i.e. killing everybody in the capsule if you can't protect them the right amount. So the chances of actually anybody getting there and coming back pretty low. But again, I like to see a little reality. I think we can go back to the moon. That would be fun. And I think we can do it with only 3 days between them. Something happens, we can figure it out. But maybe go live on the moon for a year. Start figuring out how people work in lower gravity, like the moon. Maybe we can get some data points. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.